This is the Friday, December 18, 2020 version of the Market Plus segment. Joining us now, Arlan Suderman. And I was joking with Arlan online this week, and we even mentioned it in the program. It is the dry time of year, and sometimes you just need water to get through segments. But Arlan, you had that K-State Cup. You already congratulated Iowa State. The Iowa State alums in our building, pretty excited for this Big 12 championship game. It's been something to distract us a little bit, right? Sports?
Yeah, absolutely. Sports serves that purpose.
It's been something to watch. You know, there were COVID issues with the football team that you're following, and there's other ones that pop up. But COVID's maybe not been in the cotton market so much, or has it? Because that market has been a consistent performer the last 9 months on a big upward trend. Why is that?
It has, and it's a combination of factors. The demand has come in a little better than expected, a little healthier for the economy that we have, and the production. We saw the big downward adjustment in the production from USDA in the December crop report, but out in the country, they already knew that, and they knew it was a shorter crop. So that's been supporting the market. The good news is that export sales remain solid. We've had a couple weeks of really good export sales, and the margins from the mills remain good even at these prices yet. Cotton needs to try to defend its acreage with this from soybeans. Soybeans trying to take acreage from other crops, and cotton is one of those crops that's vulnerable to losing acreage. Another factor why it's trending higher.
All right, I'm going to call an audible and ask you an acreage question right out of the bat then. We were going to get to it, but I'm going to ask Shane in Bloomfield, Nebraska's question yet again because it's a good one. We've done it the last couple of weeks. If prices stay where they are at and commodities will see, what commodities are we going to see for record acres planted? And where could prices be supported in a high acre and above to normal demand picture?
Yeah, right now I'm at 90 to 91 million corn acres. So that's very similar to this year. Remember, we had about 8 million prevent planned acres for this last year. Most of those go into soybeans. So we bring soybeans up to about 90 million acres this coming year. I also see wheat working its way higher. We're looking at 10 to 15% increase in soft red winter. We're looking at 5 to 10% increase in hard red winter, depending on where you're at in the belt. It's going to vary. We are kind of battling grain sorghum in the plains in some locations because of strong grain sorghum prices with China buying. In the spring wheat belt, that's where it's going to be tough to hang on to acres. We look for a loss of probably better than 1 million acres in the northern plains, losses in Canada for the hard red spring as well.
Any specific spots? I mean, you mentioned corn and soybeans close. You say soybeans is going to be the big winner then, especially in the northern belt that you're just talking about?
Soybeans are going to be competitive just about everywhere. Now, if you look at some of the key production areas, is the margin at a premium that soybeans have enough to get people out of rotations? They really don't like to get out of the rotations. It might be enough to pull some continuous corn into soybeans this next year. That's a possibility. But I'm not looking for any big changes in corn at this time.
But look at it this way. If we go with your theory that you brought during the show, if the farmer is truly holding on to this crop, not wanting to maybe take more sales in 2020, that's going to push the market. If nobody's selling, that price is only going to go higher. And it's just a matter of how much into January does it go. How long could a run-up in, say, corn go if people have locked the bin doors and aren't shutting it?
Yeah, it depends on how long they stay bullish, obviously, but that's going to be contingent on the news as well. If we find out that South America's got a big crop, farmers' bullishness is going to get curtailed, particularly if we see China simply not issuing those import quotas that the trade is hoping for. On the other hand, if China does issue those import quotas and it does look like a small crop in South America, that's going to bull the farmer up even more and make the market, both the board and the basis, work even harder to get those remaining bushels out of the farmer's hands.
Mitch in Hull, Iowa asked us via Facebook a little bit about some of the 21 strategy. He says, I'm showing well above break even for next year on new crop soybeans at this point. How greedy do you dare to be? What is your futures target for marketing the first 10% of your new crop beans?
I think Naomi and Matt said it well last week. It's a business. You've got opportunity to start scaling in at profitable levels. Do it and hope you sell the rest for higher levels.
Get something on the books and hope for higher, and you can always take advantage of that. Are you hearing about people that are maybe doing some re-owning strategies? That maybe they sold
Yeah, we
it?
are. Most of them are people who are working with a market analyst, helping them walk through it. Some are re-owning with futures. Some are using call option strategies. Many more are using the over-the-counter products that grain companies offer to farmers that put a floor in a price and leave the top side open.
All right, 2020 has been unlike any other, especially when it comes to commodities. So I'm going to ask Dan in Lincoln, Nebraska's question. He's asking, take the whole year right here, Arlan. Is this the bottom or the top of prices for next year? I mean, if we're starting at, let's say, 1220, 1225 on January 1, are we going higher or is everything going down? Is it hinging on what you were talking about with South America and China?
It really does hinge on those factors because if China doesn't import the levels of corn that people are hoping they do, and South America has a good crop, then we've got too much corn acres for next year. If they do those things, we need more corn acres, and corn has to fight with soybeans in a bidding battle. So it really does come down to those same factors influencing old crop.
Well, and you go back to July of this year, and it was said with Naomi, it's been said with Matt, said with almost every analyst. Look at where we were in July and look where we ended up here in December. I mean, you just don't know, especially when it comes to acres. I want to ask a little bit about weather. Kelly in Primgar, Iowa. Thank you for the question here, Kelly, via Twitter. Since we're in a weather market in December and the dollar is hitting new lows, how high are the soybean prices going? We haven't mentioned the dollar in relationship to soybeans. Is there some of that old school thinking about dollar and soybean for you right now?
Well, the dollar does matter to the commodity sector, excuse me, and that's why we've seen money flowing into the sector. It does make us more competitive, but China's going to buy soybeans. We've never in the history of Chinese buying found a price that they wouldn't pay regardless of currency exchange rate when they need soybeans. Other commodities are more sensitive to it. So it's less of a factor for soybeans. It plays somewhat of a role of bringing in more fund money. But we have never found a price that'll ration demand for soybeans in China.
But we also haven't found it to the point where China historically has been a big buyer of corn. And here they have gone on and started to buy some corn. So we just don't have some of that history. But do you see any spillover into the corn market in what you're saying?
If we look at the hog to feed price ratio in China, it's 12-1. Historically, it's 6-1. What does that mean? The Chinese Communist Party, who has the last say on everything, including import quotas, has said, we want to be self-sufficient in corn. Corn prices are at record highs, but we still have a hog to feed price ratio of 12-1 or higher. That says that they can afford to hold the line on imports for now and try to force the market to use alternative wheat and barley supplies, which they're doing right now, by the way, in order to be self-sufficient in corn. Might they really increase? They might. That you'd be in good company if you hold that truth. But we think the Chinese Communist Party will try to hold the line because of that. Their desire to help support the rural poor and to increase corn acreage. I think they will ultimately fail, but they may not fail for 2 or 3 years down the road. I think near term, they're going to try to hold the line.
Or if they do fail, we won't hear about it for several years. I mean, there's always that, if you want to take that view. And there's also an administration change to happen in January and how they approach China. I heard something this week talking about if the Biden administration is going to continue on some of the Trump ways of when it comes to trade, specifically in agriculture. We'll see how some of that plays out. I want to go to Phil in Ontario, Canada, and he's in Dresden. And Phil asked us a COVID-19 question. He says, with the vaccines here, what positive market factors will this reality bring to 2021 grain and livestock markets? Is it a question of more traditional seasonality?
Good question. I don't think yet. It's kind of like the livestock industry where contra-seasonal, we may continue contra-seasonal well into this next year until we get things back into balance. What it does now, because of all the stimulus pumped into the economy by the Federal Reserve and continuing to do so, we got that commitment last week. Congress's effort to put more money in, and rumors that Congress will do even more after January 20th, that puts pressure on the dollar, and that brings more chatter of commodity inflation. And the major commodity indices are starting to show bullish signs on the charts. That attracts even more money. It can all fall apart if the economy collapses in the near term because the vaccines haven't had their chance yet, lockdowns and restrictions. But longer term, we've got a inflationary situation to deal with in the commodity sector, and at least that's the perception of fund managers.
That is, we mention inflation quite often when it comes to consumer prices and producer prices. We've had that report, and we get that every month, so we are trying to track some of that. I wrote down, because you've said it several times, and I've been thinking about it for a long time. Counter-seasonal really is going to be the phrase of 2020 when we look back at this, right?
Yeah, it really is. The old seasonal tendencies just didn't hold. Too many unknowns. There's a whole flock of black swans.
Maybe they're gray swans because there's been so many of them. We'll see how that plays out. Arlan Suderman, good to see you. Thank you so very much for all your insight. I appreciate it.
Thank you.
All right, next week we'll look at the nut, trying to make sure it has a place at more than just holiday gatherings, and we'll also have market analysis with Elaine Cubb. She'll join us. I'm Paul Yeager. Thank you so very much for watching, listening, or reading. Have yourselves a great week.